This interview is for information only and should not be considered as investment advice or a recommendation to buy shares in the company featured. Welcome to this Stock Box interview. Hello and welcome to the Research Talks here again from Stockbox with Alan Green. Alan, how has your week been? I've obviously been very busy in London all week at different events, and mainly the Aquis Exchange event, which was really quite well attended actually. I was quite surprised. There's obviously a fair bit of interest in the sector and people hung around all day, so I take that as a pretty positive sign. But to be fair to the Aquis Exchange, it was quite slick. It was quite well organised. One of the better events I'd been to. It felt very intimate, but it also didn't feel it didn't feel sort of alienating. You know, if you're sort of a retail investor, sometimes it can feel a little bit daunting at these events. It didn't feel like that at all. And there was some I met some fanboys of certain companies, real loyal shareholders. Really nice actually. But how have you been?
Yeah, it's been a difficult week for me on a personal level, Mark, as you know, and that's why I was unable to get there on Tuesday, but I was there at the event last year, and of course last year's event also coincided with Minds and Money too. So I spent the morning at the Aquis event and then got over in the afternoon. But I echo your words exactly. That it's a very slick, a very polished event. I got to speak to lots of companies last year, and I found the presentation very professional, and just the way. Just the way the companies were allowed to sort of have their time in the spotlight, and of course, Jason Brewer of Marula won the day and got some good press coverage in City AM and other publications on the back of it. So it was well organised, well managed, and I can certainly see from the interviews I was following on my phone some of the live broadcasts he did during the day, and some very good developments and some very good presentations from the companies at the show.
Indeed, well, we had to go live with Jason Brewer because, of course, huge retail following there with Jason. He's always keen to engage with shareholders, so we had to do that one live. And yes, there's some more little videos to come out, interviews from other companies who perhaps are not very familiar, companies that perhaps don't do a lot of marketing. But stay tuned on Stockbox for those to come out throughout the course of the week. And yes, as you're right, Jason Brewer, or Marula Mining, I should say, winning the judges' vote, but importantly as well, Valerium PLC winning the people's vote, and they were very popular as well, and they were really pleased to have won that, and they can really. Actually, I think that the CEO Nick Kine was saying, we've been doing this for years and years and years, and sometimes you think, gosh, we're going down the right route here, are we banging the wrong drum? And then, as you start to see things turn in the crypto space and things start to materialize, and then, you get a good following, then you realize that, your hard work is starting to pay off. So actually, I'm expecting some good things from Valerium. The team there were really buoyed up for the future. So that's one to check out as well, Valerium. And then I've also managed to have a long chat with both Cedric Simonet of Altona Rare Earths and indeed Darren Hazelwood, of course, of Panther Metals. They were quite casual. I met Darren at King's Cross. We did an outside interview in front of a Christmas tree, and I met Cedric at his Airbnb. He's in the town for the 121 and also for various meetings with off-takers and investors. So, longer format interviews with those two to come out as well. So, all in all, productive, what was basically 3 days in London. But it's all good. So today, Alan, let's cover Silver Bullet Mines. We've had some decent news this week. And then later on, we'll talk about Blencowe.
Indeed. Okay, so starting with Silver Bullet Mines, Mark, of course, Silver Bullet Mines listed on the TSX market in Canada, also listed on the OTC market in the US. It's if you look at the share price on Yahoo, it's the company's actually made some pretty decent progress since the low point in April, where the stock was trading at 0.8%, and we're at 11 cents currently, but the share price has been building nicely, and certainly I think if a chartist took a look at the chart at the moment, there's you've seen a series of higher lows all the way through the summer, and building support. The floor has now seems to be established at 0.1 zero point 0.1, and every prospect that the share price will continue to rise, and with good reason. Silver Bullet, of course, when we last spoke about them, the company's investment proposition is based around its Black Diamond property near to Globe, Arizona, and also the Washington mine up in Idaho in Boise County. But at the Black Diamond property, of course, they have five historical producing mines. The Buckeye mine, of course, the McMorris mine, the Silver Seven, the Jumbo, and the La Plata. The area is full of, or chock full of, other major players in the region who are operating mines. And if you go and look at the Silver Bullet website, there's a great presentation on there which shows the huge companies operating in the area. You've got BHP Billiton, of course, Rio Tinto, Asaco Group, Mexico, Freeport Moran, Silver One Resources, all dotted around the Black Diamond property. So the investment proposition is also based on the mill that is near to the Buckeye mine, and this is the processing mill that the company has built, which is producing silver door bars, and the company is working towards sourcing ore to process. It's got a capacity of 125 tons per day to process, but that can of course be increased. There's lots of footage on the Silver Bullet Mines website showing the mill in action and the processing in action. So as the last year has progressed, the company has also engaged in exploration at a number of the projects around Buckeye, and indeed in December, in Zone 1, the company retrieved a sample from the Buckeye mine, averaging 24 ounces per ton, or 829 grams per ton silver, and this was across a 40-ton ore sample. And then in February this year, the company undertook a mine blast to blast some of the ore out, and that was where they discovered that enormous nugget that was a real benchmark for the company, 480 ounces per ton silver from Zone 1, and that really, I think, put the company on the map for investors, because when you pull something that size out of the ground, it does tend to make people sit up and listen. So the other asset I mentioned, of course, is the Washington mine, which is an area of 118 acres located about 1.5 hours from Idaho City. It's a former producing mine in the last century. Silver mineralization was discovered about 100 years ago there, and it was mined. The ore was shipped to the Heckler refinery in the 1980s, returning smelter receipts of about 44 ounces per ton average. So that's the work on there in terms of assessing and testing the ore has continued through the year. In June this year, the company poured its first silver door bar from the stockpile that it had bought from Washington. And in August, the company announced that production preparation was ramping up. There was an estimated 3 million ounces of silver still in situ amongst the tailings that were within the mine. The initial mine plan is to extract 2,500 tons of high-grade material, and that material will be brought to the mill at the Buckeye mine and will be processed in the order of 50 tons per day. So 50 tons per day of ore will go to, and then of course the silver door bars will be produced from that. Also during August, a highly significant appointment to the Silver Bullet mine board. Karen Musen-Mez was brought onto the board to oversee the processing. Karen is an experienced geologist and mining engineer with 25 years experience. He's chief executive of Volta Metals. also formerly CEO of Blencowe Resources. And at that juncture, once Kerem came in, the company also appointed a contract miner to undertake the work there. The target zone included a bulk sample which was extracted 44 ounces per ton of silver, and also some gold was discovered too. And at this point, the company also started work on the historic Buckeye mine. Now, the Buckeye mine is about 8 kilometers from the actual ore processing plant, so very close by in terms of getting the ore to the site and of course processed. In terms of funding, the company has announced that it closed a debenture financing of just over $1 million, $1.1 million in mid-October. So the company is now well funded to continue the work of exploration both at the Buckeye mine and also, of course, the work to extract the ore from the Washington mine. But another dimension, they're close to the entrance of the Buckeye mine. There is another silver mine, and an arm's length agreement has been put in place with the owners of this mine to process this ore. And the initial runs are very encouraging indeed. The ore is referred to as Super Champ. And initially, the a run from 200 pounds of material was put through the mill. They established a grade of 12 ounces per ton from that, derived concentrate of 350 ounces per ton, and the company announced at that point that it intended to mine, ship, and process some 50 tons per day from the facility, which of course, all the time that mill is operating, the company is generating cash. And as we've said before, Mark, with any mining company, if you've got a production side where you're generating cash, bringing cash into the company the whole time, and then you've got the blue sky exploration upside, that's really the ideal combination. And Silver Bullet certainly has that in spades. And I think that is reflected going back to the share price and the progress in the share price this year. The investors and shareholders are recognizing that. And then, of course, the real feather in the cap, I think, for the company this year is that the grade was independently assessed, and it's all very well undertaking your own assessment and grading your own ore on site, which of course the company is able to do. But more importantly, when that assessment is undertaken independently, then you get a real feel and third-party validation for all the work you've done. From its internal sampling, Silver Bullet established or processed a 500-pound sample. They established a grade of 19 ounces per ton silver, concentrate of 307 ounces per ton silver, which was impressive in its own right. But the independent lab test actually improved on that quite substantially. So from that sample, the independent lab test established 28 ounces per ton versus 19 ounces per ton, and concentrate of nearly 340 ounces per ton. And that equates to, from that stockpile, 10,563 grams of gold, which is pretty substantial. So this is just the start. So now they've got that independent validation. They've got capacity to process 125 tons per day. They can now ramp up that capacity, produce the silver, and of course pour those silver ore bars and sell them into the market. So really exciting development on the cash flow front there for Silver Bullet Mines, but also there is the potential, the nascent potential that Washington mine in Idaho, and of course at the Buckeye mine itself, where they've extracted some decent grades, and of course yet to work and yet to hear anything about work that could be undertaken at McMorris Silver Seven, Jumbo, or La Plata. So, yeah, all in all, the company I think is very well placed to deliver further growth. And looking at the share price chart, I think it's a good jumping in point at this juncture.
Well, yes, of course. And you remember we did that podcast, didn't we, with the CEO,
We
John?
did.
Was it John Carter? Yeah,
John Carter, yeah, which is actually
so
still on their website. I looked on the website, and that's still
oh,
sitting on their website.
oh, good.
Yeah,
Yeah, well, he really explained, didn't he, the whole history of Silver Bullet and some of the problems they'd faced, of course, during the COVID era that a lot of companies had faced there. But now, now's the time to start, getting on and delivering, and it looks like that's what's happening. So, whilst they're getting those things all finalised for the Buckeye mine to process their own silver, they're basically using their mill and their processing facilities to run through what was from this week's press release. Very, very high grade. I mean, 28 grams per ton is a head grade. I mean, that's really quite something, isn't it? So that will get them into cash flow, which is what they need to do. That's what Peter Clousey wants.
Yeah, and that's very important. But I think it's also significant that the independent lab test, because that £500 sample was graded by Silver Bullet Mines themselves, and then the independent lab test actually came back with a higher grading than Silver Bullet had. So that's also good, because it probably indicates that Silver Bullet might lowball their grading, and then take it out into the market for independent validation. So if you get numbers from Silver Bullet, then in reality the numbers might well be higher in an independent test, and that's a very encouraging sign too.
Indeed, yeah, indeed. Well, it'd be one to keep an eye on. I think it could be a pretty good year for Silver Bullet now that they're really starting to get things processing through that mill. And then, of course, they've got, as you say, the blue sky with the mines they've got. So thank you, Alan. But let's talk about Blencowe Resources, who, of course, we do speak about a few times. But what's the latest from Blencowe?
Well, it's been I mean, this company it's a head scratcher. The company's currently got a market capitalization of 10 million, just over 10 million. The shares of trade as high on the year as 6p, as low as 3.5p, but they're currently just back over 4p again. But you compare this to sovereign metals, for instance, also in East Africa, in Malawi, and you've got a valuation there of some $250 million. Now, of course, Sovereign had the rutile project, which is the largest rutile project in the world, which is Cassia, and they also have a graphite project with it as well. And across that region, they're discovering graphite, which is not dissimilar to Orem Cross, which is of course the Blencowe Resources asset. And I just think if you do a comparison between the two companies, the graphite element of Sovereign is about 4 to 5 times of the graphite or the valuation that's ascribed to Blencowe, and actually Blencowe is much further down the road than Cassia in that regard. So that's a hugely important consideration, and I just think it offers fantastic value from this point. So just a summary of Orem Cross. It's a tier 1 world-class graphite project in Uganda. There's an estimated 2 to 3 billion tons of graphite near to surface. And when I say near to surface, you could literally drive a tractor and hoe across the ground there, and you'd be raking up flake graphite. It's that near to the surface. So the company acquired Orem Cross some years ago. They've got an initial JORC mineral resource estimate of 24.5 million tons at 6% graphite, but that's on just 2% of the total license area. And the license area is over several thousand hectares. In fact, it's a lot more than several thousand. It's 2,000 square miles, 520,000 hectares. And it's absolutely enormous. So in terms of scale, it's not dissimilar to Sovereign Metals' Cassia project. And I think this is where people need to start doing these comparisons and work out where the value is, because I do believe that Blencowe is fundamentally undervalued. So the company has a 21-year mining license, which was issued in 2019. So there's about 15 years left. All of the permits and all of the environmental permits are in place. It enjoys strong government support and ministerial support, and indeed the ministers have been actively involved with some of the testing that's been taking place in China for the ore grades. It's got strong community support around Orm from the locals, and of course the jurisdiction is benign and it's safe. Now, also, what sets Orm apart is the fact that the company has a 5 million non-dilutive grant by a tier one US institution called the Development Finance Corporation, which is it's an offshoot of the US government. So it's received this funding as grant funding to fast track and develop the project, and it now has Blencowe now has full project funding in place to complete the DFS, which is currently in its final stages. In 2022, the company completed a PFS, which indicated a long life, high margin, low capex operation with a post-tax net present value at that point of $482 million. It's going to be an awful lot higher than that, though. The DFS is underway. The premier grade end products that they've produced have been proved in these tests I mentioned, pre-qualifying test stages. And this is high quality graphite for sale into the battery and anode market. And also, graphite has a multitude of applications. It's not just about battery, but graphite is also used in lining for steel foundries. It's also used as a fire retardant, and it has many other applications. And the higher grade, higher value, larger flake markets is going to be well served by the Blencowe Orm product when it goes into production. The quality for this spherical graphite, which of course is used for battery anodes, is exceptional. The company has also uniquely entered a joint venture, which was announced in September, with a company called Triessence. And Triessence are a Singapore-based leading spherical graphite and anode material producer. And the joint venture will see a beneficiation facility built in Uganda, close to Orm Cross, in order to process the graphite. And of course, this is to process the high grade very pure graphite for anodes, for battery anodes, and ultimately to reach electric vehicles and the like. But it's highly significant because this Triessence are an established operator in this field, so they bring all the expertise to the table, and it'll ensure that everything is produced and fast tracked into market. It'll also enable what is currently a 96% graphite concentrate to be upgraded to a battery-ready 99.95% uncoated spherical graphite product. It's going to significantly enhance the commercial returns from the Orm graphite, but also that will mitigate risk. It doesn't leave Blencowe with the costs of that manufacturing plant in Uganda. So that was a huge step forward, announced in September. Also in October, Orm received full accreditation at the Mineral Services Partnership Forum. And the chairman, Cameron Pearce, said at that point it was a huge step for the company, and it further differentiates Orm as one of the select few top tier critical minerals projects worldwide. On the back of that, the company announced a fundraise. It raised $1.5 million from institutional, and then another $200,000 from retail at 4p. This is to complete a 6,000 meter drilling program, which is the final work stream required to complete the Orm DFS. And indeed, a day or so ago, the company announced that program of drilling had commenced. So we're very much in the final stages of this, but the program or the drill program is important because it is expected to significantly expand the existing JORC resource and Orme Cross reserves overall. Remember, I mentioned at the start that the JORC mineral resource estimate of 24.5 million tonnes is covers just 2% of the licence area. So the drill program is targeting extensions to the Northern Syncline and Camp Low deposits. Plus, it includes a step-out campaign to outline additional reserves and target resources in a nearby target zone. So they're now starting to move out into elsewhere into the territory, which of course is, as I mentioned, it's 520,000 hectares. So it's expected to add substantially to the JORC Standard Reserve and also to enhance the DFS economics. And it's really now in the closing stages of the DFS. So Blencowe's at a unique stage. It's at 4p where the money was raised. It's got everything in place now. It's got the US Development Finance Corporation funding partnership. It's now accredited by the MSP, the Mineral Mineral Services Partnership Forum, and everything is in place to complete the DFS, build the beneficiation plant, and get Orme Cross graphite to market. So, it's at a pivotal point right now, and I think it's at a really it presents, I think, a very exciting opportunity to invest at this point, and be aligned with the institutional retail investors that got involved in the placing.
What's the market cap at the moment?
Just 10 million.
10 mil, okay, yeah. So do you think that the DFS will maybe finally give some recognition, and when they get building the plant, when it becomes a bit more, I don't know, real?
Well, we've seen this with so many mining companies, Mark, haven't we? You get to that phase and you think everything's resolved and sorted, but
and then it still goes on.
And it still goes on. There are always challenges to be encountered, but as opposed to doing it all themselves, building the plant themselves, and then having to deal with perhaps issues and problems that weren't foreseen. I think the partnership with Triessence is very hugely important, because this is a company that is already manufacturing anode material and spherical graphite. So they know the process that they have to go through to complete that. They know the problems that might arise, so they can plan around this. So the plant should be built pretty quickly and get into production pretty quickly. But that's just an observation by me. And of course, I've worked with this company for some years, so I've seen Orme Cross evolve. I've seen the company develop.
I know. I remember we've talked about them before when you were introducing it to us. Maybe even 2, possibly 3 years ago, we talked about the resource itself and the flake graphite that you can sort of go along and pick up. And now look where they are. They're at DFS stage. Going steadily through all those value inflection points. And those who remember the Greatland Gold days, even when that joint venture was announced, nothing happened for months and months. Then that company, I forget which one it was, sort of pulled out, and then the other one, Newmont, I always get confused with it's Newmont, Newcrest, I'm not sure, came in, and again nothing happened for months and months, and suddenly all was recognised.
Whatever phase or whatever box needs to be ticked in order for that to happen. It's very hard to it's very hard to be able to point at a point in the development cycle when you can say, yep, that's where it'll happen, because the markets we're in at the moment don't reflect progress. Whereas probably if you take this back to mid-COVID, or take it back to back 10 years previously, if these developments happen in those markets, you'd see a snap response in the share price, and the markets would respond. And obviously a response generates more liquidity, greater volume, and so on. And value will always out in the end. The value proposition in Blencowe and Orme Cross will out in the end. And the fact that investors have been able to come in and fund the company at this level, it's a great thing, but it's still at that price at the moment. I'm sure some of those investors took profits and jumped out, but I'm sure others others are going to stay for the journey, because we're really in the final phases now, and it's going to be transformational, especially once that plant is built.
Indeed. Well, thank you very much, Alan, as always, for your time. So do have a pleasant weekend, and we'll speak again next week.
Thank you, Mark. You too.
Well, we're joined again this week by Dan Flynn. Of course, we spoke to Dan last week for the first time, where he was telling us all about Green Rock, and that was a really good introduction to that company. An interview from Stopbox did indeed follow based off of that. So thank you, Dan, for introducing me and, of course, our audience to Green Rock last week. But this time you're back on with having a different conversation about a different company, a company called 80 Mile. But, how are you doing, first of all? How's your week been?
Hi, Mark. Yeah, thanks for having me on again. Yeah, I'm really good, thank you. Busy week. Yes, and there's still after the Trump election, there's still a lot going on in the markets, isn't there? The crypto and stuff. How about yourself? You had a busy week?
Been pretty busy, yeah. Of course, I was in London earlier in the week, mainly for the Aquis Stock Exchange event, which very surprisingly was very busy. I think it was quite a bit driven by the announcement, of course, that Six Group were basically making an offer to buy Aquis. So across what would be the enlarged group, when this acquisition completes, investors will have access to the UK, the whole of Europe, and Switzerland, making it basically the biggest stock exchange group on the continent. So I thought that was really good. Yeah, opens some doors, hopefully breaks down some barriers for foreign investors into London, or indeed investors from London into Europe. So it was a good week. Yeah. Busy but good.
Definitely, it's always good to hear that Aquis is getting some more interest. It's it's sort of stayed under the radar, hasn't it? But there's a lot of decent companies on there, and I think if
there are. Yeah.
If the exchange itself has a bit more profile, I think people will go out there and do the research that they need to find these opportunities.
Indeed. Yeah, indeed. Well, anyway, start us off then. Introduce us to 80 Mile. What's this company all about?
Yeah, definitely. So just to start with a bit of background. So 80 Mile is a explorer and developer that I think is worth having a bit of a look into, really. So the company, to start with, just to lay it out there, the company brought in an entirely new board at the end of last year to address the long-term decline in its share price. Back then, it was known as Blue Jay Mining. So they did something of a factory reset, I'd say. They cut staff, they cut costs, they extended the company's focus beyond base metals and titanium to include helium and hydrogen, interestingly. So the company's been building upon that over the past year. That's what we're going to look at today, hopefully. And the market cap and the share price have yet to really deliver that jump that long-term investors would have been waiting for. But I think there's a lot of interesting moving parts here that people should have a bit of a look into.
Okay. Well, it's always nice when you get that sort of turnaround story, if you like, with a new board and perhaps a new direction. So is it worth talking about the legacy assets, or is it more about focusing on the future here, do you think?
Yeah, that's a good question, because there's a bit of a mix of both. It's not like they've taken the old assets and parked them as non-core things while they focus on the new assets. They're really focusing on 4 things in particular, and I'll just quickly run over them now. And you have to excuse my pronunciation of some of the names. I'll give it my best shot. So first of all, 80 Mile has uncovered high concentrations of helium and hydrogen at its Outokumpu and Hammaslahti projects in Finland. So it plans to accelerate exploration of both of those. I think Outokumpu is particularly interesting because it's found in the same sort of setting as the world's largest known deposit of white hydrogen in France. You have to look up the details about white hydrogen if you really want to get into it, but the fundamental point is that it can be produced at a fraction of the cost of green hydrogen. So as well as being a big potential asset, this is a commodity that people are going to really be looking for moving forward as we focus more on generating power from hydrogen, etc. So the company also has a JV over the Disco nickel, copper, cobalt, and PG project in Greenland. So this is with a company called Cobalt Metals, who are leading the exploration there.
Mm-hmm.
So the project's huge. It's the size of Luxembourg. It's a small country, obviously, but it's still a big area, and it's already proven to contain a massive sulfide system. And a few months ago, I think it was in April, the partners identified 7 priority targets. And these targets have characteristics indicative of deposits on a scale of Norilsk and Voisey's Bay. So these two are often used as a comparator when companies are trying to explain that they're looking at something decent. They're 2 of the largest sources of several base metals in the world. Norilsk is in Siberia and Voisey's Bay in Canada. So, early days, but that's certainly a good target to be looking for. Next, we have a new asset that 80 Miles bought into called Jameson Land. It's got 51% of that. And this one's really could be quite exciting. It's got a long history of resource evaluation that has indicated that it has the characteristics for large helium and white hydrogen deposits. Okay. And 80 Mile hasn't really done much work on it as it stands. They've only just got it themselves, so they will have done their due diligence. But 80 Mile has gone on the record in announcements saying it thinks any discovery that's made would be in the top tier of resources and producers worldwide. And management's even said the potential resources could be, between 2.4 and 8.1 billion barrels of oil equivalent in place, which is big. And then finally, there's the Dundas titanium project, which is where 80 Mile recently published a hard rock JORC exploration target for up to 540 million tons of ore or material, grading up to 5.5% titanium dioxide. So that's another big thing that they're looking at developing.
Okay, so we've got basically hydrogen and helium, and then the titanium project plus the Greenland project, nickel, copper, and cobalt.
That's correct. Yeah, it's a big variety there.
Yeah. Yes. Indeed. So, are the new ones more the helium and hydrogen ones?
Yeah. So the Outokumpu and Hammaslahti, I think, were previously base metal. That's what they were targeting there, and they've recently reevaluated them with the hydrogen helium lens on and found some prospectivity there. And then obviously you've got the Jameson Land, which is where that 8.1 billion barrels of oil equivalent could be in place. Okay.
So helium then is obviously quite fairly popular, isn't it, sort of at the moment, and has been historically. Hydrogen though, so this is natural hydrogen. This is hydrogen that's found naturally underground, like any gas or oil that's found underground. Is that right?
I believe so, yeah. So at the projects in Finland, they have been historically mined. There's loads of holes. I can't remember the exact number, but after finding the initial quantities of what they think could be commercial hydrogen and helium, 80 Mile are now going around sampling some more of these to really get a picture of what they're looking at.
Okay. Yeah, natural hydrogen. There's not many companies who are involved in natural hydrogen. In fact, I know of only one other company, and that is Oscillate, who have got a project out in, I think it's Montana. It's over in the United States anyway. Pretty much a very new, commodity to be exploring for, because most people would associate hydrogen with the electrolysis, producing hydrogen as cheaply and as greenly as you can through renewables, i.e. solar or what have you, because it's very energy intensive. But to find and to basically exploit hydrogen, natural hydrogen, is a lot more economical than the electrolysis version. So we might see a bit more of this coming down the pipe, but it's still very much in the early days. I mean, I don't know. What do you have any take or any research on sort of natural hydrogen?
Well, it fits in nicely with the green transition narrative, doesn't it? It's increasingly being used in clean energy. Demand's expected to increase. I don't think it's expected to quite double by 2030, but I think it was 1.5 times. And we're going to need more supplies of it that fit in with that natural green narrative that are produced in the most environmentally friendly way possible. So yeah, I think we are likely to see more companies looking for it. I presume that's the reason that 80 Mile expanded its focus into the area beyond other green metals, like the base metals and titanium in the first place.
Yeah, indeed. So where's the focus of the company at the moment then? Do you know do they have a flagship project, or is it more that there's sort of they've all got equal weighting?
Yeah, I think it is an equal weighting between the projects. So there's been a noticeable pause in news flow recently at 80 Mile. There's some commentary on that online. I think it's been to the frustration of shareholders. The share price has drifted back a little bit to 0.3 pence as of the time I was doing my research. Market cap's currently 6.3 million. But I think that, combined with the fact that we're looking at a lot of news flow coming up, is what is really making the company look interesting from here.
Okay.
Yeah.
And that joint venture then, how much do you know the sort of the split and who takes on more of the financing or the operations, or is it very much a sort of almost a 50-50?
I think it's pretty much 50-50. Yeah, I believe 80 Mile actually has the slight edge of 51%, but I believe Cobalt are pushing forward the activity, the preparations for drilling, etc. at the project.
Okay. So then, just thinking then on what's to come, just I don't know, maybe we've not got long left until the end of the year, but what's perhaps the next 6 months do you think look like in terms of expected news flow from the company, potential sort of value inflection points?
Yeah, so like we were saying, there's these 4 projects that they're active on. None of them have been parked, as far as I'm aware. So I think we could see a lot of imminent events moving forward. So just for the record, so the company raised 1.75 million in August to cover its next planned steps at the 4 core assets. So that's going to take the company so far. And I think there's a lot of events there that could create some value before the company, has to start thinking about going out to the market again. I'll just run through some of those. So at Outokumpu, as I mentioned, the company's sampling historic drill holes and producing a proof of concept study. That's going to examine the feasibility of extracting gas from the projects. So if that's successful, that could be a big step towards cash flow and potentially start to generate some commercial interest in the project itself. So you got 80 Mile and Cobalt at Disco. They're prioritizing targets for drilling. I'm not sure exactly when they are planning to drilling. I don't know if they've announced that publicly, but I think the consensus is that it's likely to be next year. And if that can result in a discovery or some sort of physical evidence, some decent grades that further the case for there being Norilsk or Voisey's Bay scale potential, that's going to be another tick in the box for that project. Jameson Lake, the company's doing the prep and assessment it needs to start learning about the commercial viability of that massive amount of barrels of oil equivalent gas. So we'll see if that's, it's a big number. They're shooting high with that one, but we'll start to see if they're being realistic as we learn more about the project. And finally, at Dundas, the company's completing additional exploration across the new extra area of the project called Thule, which is spelled Thule, and that's prospective for copper as well. So I think the view there is to produce a global resource estimate that gives an updated sense of how much titanium copper there is here. So I think all of those things stand to increase buying. And Mark, you got to remember all the minerals and the commodities and the gases they're looking for are all the demand for all of them is increasing and supplies are going to be needed. They're all key players in the green transition. As the company uncovers more evidence, one or more of the projects, that they could provide a new source of one of these commodities, that's going to start generating some commercial interest in taking over the projects, perhaps, or some offtake agreement in anything that might ultimately be produced, or some funding interest. Things like that are what, as you well know, are what really get buying growing in a company. And I think it will be to the benefit of early shareholders perhaps at this point or in the near future, if that does take place. We'll have to see.
We'll have to see, as always, in this exciting game that is investing in junior resource stocks. But thank you very much again, Dan. Definitely. That's a really good little introduction to 80 Mile. I'm sure we'll be covering them again with you. Yeah, in the not too distant future. It sounds like a few things are due to happen.
Definitely. Thanks for having me on again, Mark.
If you enjoyed this interview, then give us a thumbs up, a like or a retweet. Subscribe to us on YouTube or follow us on Twitter and hit that notification bell to be the first to know when we release new content. There's loads of great content on our website too, across all our programs at stopboxmedia.com. Thank you for watching.